Hello friends, Namaskar. Welcome all of you to my channel. Today let's discuss about the leasing versus purchasing decision, friends. And this is very important concept when you are studying, majoring in the finance area. That's the area of corporate finance. Yeah, even it could be useful to the students of MBA, MBS, yeah, MCOM, chartered accountancy, yeah, even the company secretary, CFA, like that, friends. So this is very important that you need to understand first of all the given information. This is all about the particularly that's the BTEL Incorporation, which is the telecommunications service provider, and actually this company is leasing out the 100 towers from the T-share incorporation with the leasing payment that we can say that as lease payment is the 5 million, while lease period is 5 years. And the next one is that we need to understand here that's erecting 100 new towers which cost 18 million, and that includes cost of equipment and installation, etc. And the company need to obtain for which that's a long-term secured loan of dollar 18 million at the cost of, we can say that interest rate is the 5% per annum, while cost of maintenance as a security power and the fueling is a 10,000 per annum per tower. And since this is the case of your 100 towers, so when we multiply 100 towers into 10,000, this will be the overall maintenance cost required. Okay, we have a tax rate is 40%, while total long-term weighted average cost of debt is 6%, friends. So this is before tax. Okay, while the tax laws allow the straight line method of depreciation for 5 years. So the question is about determine whether the company should erect its own towers or lease them out. So that is the overall, we can say, the decision making process. Okay, so here we could understand the at first leasing concept, then we would discuss about the purchasing one. Simply we would find the present value of the after tax cash outflow, and accordingly we could take decision, friends. So it's all about when we talk about the leasing alternative, friends. So this lease period is the 5 years, and each year that's the lease payment required is the 5 million. So 1 to 5 each year, this 5 million need to be paid. So this is the case of annuity. That is the basic reason you need to understand. We have to consider present value interest factor of annuity at 3.36 percentage. Simply our cost of debt, you can say here, our weighted long-term weighted average cost of debt is 6%, and since 40% is the tax rate, that is why is the 6% into 1 minus 0.4, so this is will be the 3.6 percentage. Okay, and next we need to understand here the tax sale because of making payment of the lease payment. So is the 5 million into 40% is the 2 million, and after tax cash outflow would be the 3 million. So that is the present value interest factor annuity is the at the rate 3.6%. Remember, friends, you can't use your annuity table here since our rate itself is in the fraction. So we can use the simply PBIFA equations. This is simply 1 minus PBIF divided by KDT percentage. Okay, so simply once we multiply this 3 million into this figure, so this is all about present value after tax outflow, and this is the million. Once we divide this divided by is the 10 lakh, that will provide you 13.51 million, friends. Okay, now this is all about your present value of the lease alternative. Now what about the purchasing alternative then? So in case of purchasing alternative as given in this question, that is the loan annual cash flow of purchasing have the three components. One is loan amount to be paid, repaid in each period, maintenance cost to be borne each year, and depreciation cost and interest expenses. And that is the basic reason. At first we have to find the installment payment amount. We can say that that is the PMT. Okay. So cost of tower we have is itself is given in the question, that is the 18 million. Okay, so 18 million cost of tower, and this is PBIF 1 by PBIF equation is that 1 by 1 plus, and since this is your, we are talking about the borrowing. We are going to purchase it. Either we try to lease it or purchase it. So that is why we have to consider present value of the after tax cash outflow. At first we discuss about the present value of the lease case. Now then based on this background, and we know that what about the installment case is that simply once you divide this cost of tower divided by present value interest factor annuity 5% 5 year 4.3295, this is simply our borrowing cost is how much? This is the 5%. Okay, so once you find in this installment payment, then next job is that we need to prepare debt amortization schedule, friend. So look at this, altogether loan period is the secured loan case is the 5 year. Next column we have installment, third one is the interest payment, principal payment, and the last one is the ending loan balance, friends. Okay, so zero period is nothing. This is your, we have taken the loan to purchase the tower. Okay, is all about, this is the case of your 18 million. Okay, so 1 year case and installment we already calculated this one. Yeah, approximately we say that this is the all installment each year, this will be the same. Again this will be the case of that's it, this is the installment payment, and this is interest is the 5% of the loan amount. So it's 18 million, 5% it will be the 9 lakh. Okay, so that is why the principal payment it would be the this minus this. Okay, so now what would be the remaining ending loan balance? So this value minus this value. Accordingly we do this process, and at the end loan will be repaid. That is also called as a loan repayment schedule. Okay, yeah, debt amortization schedule. Now simply we need to understand here that it is necessary to prepare the debt amortization schedule because the tax laws don't allow the deduction of the total loan amount. Instead only the interest expenses is allowed as a deduction. Okay, and the next important point is that we have a straight line method has been used for the towers. Those cost of towers is the 18 million and useful life is the 5 years. So that is why we say that that is the case of simply we say that is the b minus syn. Okay, so b minus syn is that simply we say that that is the case of is the, this is the 36 lakh depreciation. Okay, so now what about the tax shield? So tax shield needs to be subtracted from the installment maintenance cost while finding the net cash outflow. Okay, so this is the big table you could see here. This is the calculation of present value of the after tax cash outflow of purchasing. So here we have a period time 5 year, installment payment, as we calculated already. Now maintenance cost. So maintenance cost is all about, this is the per tower we have a cost is 10,000. So is the 100 into 10,000, 100 towers. Okay, so it would be this figure. While depreciation we already calculated by using the straight line approach. While interest expenses, for which we calculate the debt amortization schedule here. So debt amortization you can see here, that is the interest expenses. Okay, then tax shield simply we need to find, we have a tax rate is 40%. Okay, so maintenance cost, depreciation plus interest expenses into, once you multiply with the tax rate, that will provide you the tax shield. Okay, now this is the cash inflow. Okay, tax shield. So cash after tax cash outflow, that is the, once you deduct the that is the inflow part, then you would have a after tax cash outflow is there, and we have a present value of, so is the 3.6%. Again we are costing this figure, that is the long term weighted cost of capital. Okay, to find the present value. So in this case also friends, we see here, so present value of the after tax cash outflow is the total, once we multiply with this one, is the 13.910 million. Okay, and while you look at your previous calculation of present value of after tax flow in case of leasing, this is 13.51 million. So actually we need to select the option which is cost effective, and that is the basic reason we say that since the present value of the cash outflow under the leasing option is lower than that of present value of the after tax cash outflow under the purchasing alternative. Okay, so option, we can say that that is the basic reason is the lease option would be preferred. Okay, so friends, simply we discuss about the I just show you the overall calculations how we could take decision about the leasing and the purchasing decision. If you really like this content, please like and also subscribe my channel, that is the Finance Guru Pawan Kumar Jha. Thank you all of you for watching this video. Please take care all of you. Thank you.